Yo, good morning, good afternoon, good night. Coming at y'all with pretty much another another video apart from like my chart breakdown from like 10 minutes ago. So I finally had my biggest trading week this week, about $24,000 in profits. All on live. I will post the link, not the link, but I'll post the little video here so you can see that the trades was live and all of that. But really, we just about to break down these charts, go crazy on them real quick, just to show y'all what I look at and what I look for in the market when I take these trades. And eventually, sometime, I mean, for my traders out there that's watching this video, you can do it too. So let me just switch the scenes real quick, and then we can get into it. So, I think the first trades I took this week was on GBPUSD. So let me pull up these trades on my phone real quick. Alright, so these strings here. Alright, so pretty much the start of this week, I hit up gold here, if I'm not mistaken. So we go to our daily time frame, just to see what gold looks like on a daily basis. Right now, it's mostly in kind of like that bearish trend overall. So you can see price making like these lower highs all throughout this entire area. Then if we go down to the 4 hour, I seen how structure was kind of like still on this downtrend, and it made this last lower high here until it actually broke this black line, which was resistance based off of this bullish bearish formation here, these candles. And once it broke that level of resistance, it made pretty much a new higher high all along here, and then it pretty much just had retraced. So the first order was at 1749.76. So I'm gonna just mark that off with a red line here. So we're gonna do 1749.76, and then we're gonna make that line dotted. Yeah. Alright, so once it broke that level of resistance, I kind of pulled out my fib here. So you see where it made this bearish candle, then this bullish candle, and then it started pretty much that rally to the top side. So point A to point B here. So first we had like a 23.6 retracement, then adjust the point B to here. So then it pretty much started retracing kind of further to that 38.2. So not quite a fully 38.2 because it didn't close. The candles did not close on that area. It just kind of wicked out. But then we had this, all of these exhaustion areas here, followed by kind of like this level of resistance over here. I'm gonna just kind of make this line blue so you guys can see it a little bit better. Then after seeing this, how price had retraced. So usually with 23.6s, you can look for like a continuation or consolidation area. So once it made that, it confirmed that level of support. Price had retraced back to that same level, and then it gave me this clue here once I seen this exhaustion on this bearish candle, which gave me enough data pretty much to want to jump to my lower time frames. So once we go down to our 30-minute, right, this was mostly kind of like a confidence trade because it kind of was on this, I guess you can say, counter trend from here. But then once price kind of got down here, it started gave you a long rejection candle here, and then kind of filled the wick based on this bearish candle here, boom. And then it kind of had formed this exhaustion here, and then a nice kind of like a bullish, nice bullish candle, not an engulfing per se. But after seeing that, I kind of wanted to dip a little bit deeper to get a little bit more detail here. We went to the 15-minute, and then now that candle kind of cleared up some of its room. So now we have kind of like this bullish engulfing here. On that level of support, which is kind of like a double bottom. I don't really like to call double bottoms on like the smaller time frames. But then once you had that, we had a nice push up, which confirmed that the strength of that support is really strong. So once this price had pushed up, it came right back down. Then I had, at this point, I was saying to myself, this is probably like a prime entry for like a good risk to reward ratio. I'm only risking about like 15 to 25 pips, I think, was my stop loss range. But I didn't even get to see any of that drawdown. It was mostly like almost instant blue, because I got in on pretty much this wick here. So the wicks are kind of like, they're still candlesticks on the lower time frame. So if we go down to the 5 minute, we can probably see what that area looks like. So I'm just gonna highlight it yellow, and then go down to the 5 minute here, and then boom, we have a little bit more detail on that level of support. As you can see, price respected it 1, 2, 3 times here, and then we have a nice another bullish engulfer based on that level. Because once price came up here, I was like, dang, I missed the entry, because this was kind of like a decent entry, but it was just not enough data for me to want to risk any money in that type of market right there. So once it pushed up, it came back down, kind of confirmed that level of support, and then it pretty much gave me a second chance to enter the trade. So right here, it was pretty much like, bet, gave me a retrace, I'm about to hop in this thing. So price came down, boom, tested the level again, gave me a level, some seller's exhaustion here based on that candle, and then after I seen that, boom, I was in. And then after that was pretty much like instant blue profits off of that. Then it pushed all the way up here, and then pretty much my TP was I took profit like around, it was like 1769.40. But it was like up here at this area. So once I seen this doji, it was kind of like a pause. I knew he was at like kind of like a strong resistance level on just based off of our higher time frames. And I knew it was a 23.6, so there was a good chance gold is not ready to break yet. So this green box that you see up here was my like primary target for this overall trade. But I didn't like the volume I was seeing on lower time frames up here, so I just pretty much exited out based off of that candle and that point of resistance that you see along here. So that was that trade, and then after that, I was looking at the market, and the way it exhausted, like right after that, the next day I took like a small sell. It was like not that much. I mean, it was still a 5 lot, so that means it was $50 per pip. So we had like 1767.93 was the sell order. 67.93. So about in this area here. So after I seen that, I pretty much hopped right back in for the sell opportunity. Just based off of this rejection that price had come down to. I did not consider this like a valid pullback to continue, for price to continue pushing any further, mainly because of this big rejection candle in this area. We're still kind of like in that 4-hour range, so it's gonna take 2 big bullish 4-hour candles really to break that 4-hour range for me personally. So then I started seeing price like pause here, and then with no hesitation, I was kind of willing to risk some of my profits that I already had made from this buy here. So I just hit sell, and then I had a nice stop loss pretty much just based on this nice bearish candle, which was about like 1767. So this entry was like right here, 1767.93, just based on this candle, 15-minute candle here. It had exhaustion at the top. It was kind of full towards the downside, and it was like 7:30 at night, so it was Tokyo session, so we didn't have much volume. So stop loss was kind of like above here. I was willing to risk that 30 pips to kind of take price all the way back down here. But like this resistance right here, I did not like, and how price just paused here for a second. Like I could have kept my trade open and then made more profit, but I was kind of more safe than sorry, because gold was in the overall uptrend at the time, and you know the real trend could kind of kick in at any time. So I took profit right here. So that was like that $1,000 that got me to like $11,000 on gold for the week. So then on my next trades were pretty much based on GEU. I really should have started with a blank chart because now I gotta erase all that after this video, dog. Because I'm erasing my markups. All right. So now on GU, the next day, I seen something on GU that I like where price was pretty much based off of the price levels. With currency pairs, I'm comfortable trading 10 lots right about now, which is $100 per pip. So a couple of my entries I took L's on around this same entire area. It was about 136 200 area. So I'm gonna just mark this off so we know where most my entries were. So go based on our daily time frame, just GBP was in an overall downtrend, obviously, right? We have our lower lows, lower highs, lower lows, lower highs. And then I had price come up to this level here, which kind of makes for a nice confluence area. We had a break of this level daily support here, 1 2, based off of these two bearish candles, boom boom, broke this level of support where this black line is, and then price retraced. This was about like a 61.8 on the like Fibonacci. Eventually you'll be able to tell by the naked eye like where it was. So I seen this daily exhaustion wick based on like that. I think that was like that was like Monday, and then Tuesday we had this nice bias exhaustion candle here as well. So after seeing that back-to-back exhaustion, I'm thinking, okay, price is ready to continue the overall downtrend. So when price was at that level, I went to my 4-hour, and I seen how price was pushing kind of aggressively to the top side, and then we had this aggressive rejection here to the top side as well. And then we had lack of really good volume candles to the upside. It was just mostly still stuck within this range. So you see this wick here on this doji, and then price kind of came back down and pushed back up to fill that wick. If we go down to an hour, you can see that that was pretty much just pretty much a range almost, right? It looks kind of like a higher high, but look at the way like all these candles form, massive just buyers exhaustion towards this entire area. So I wouldn't even consider this like really like a higher high. And I think I had a trend line here to just to measure the overall counter trend and see where the momentum will slip into the bearish favor or the seller's favor. And once I had that break of that trend line, that's where it kind of confirmed to you that the sellers are ready to come into this market. So based on this entire area, so I took a couple buys at 136, 143, 136, 193. Here, just based off of kind of like, I'm kind of not, I don't even want to go over these trades. They were only like $600 and $100 trades based off the 10 lot. They were really short and sweet just because of the way price started acting. And the main thing with trading in general is you want to be able to adapt to the market conditions over time, like while the candles are forming, because if you don't adapt, you'll get stuck in a certain bias, and then you'll pretty much start marrying your trades just based off of that. Knowing your overall bias is important, but you also want to keep in mind that the market can change in an instant because the market is constantly changing. So you want to be able to be dynamic when it comes to pretty much technical analysis. So going over the 7K trades I made, so it was pretty much based off of scalings. Prices were 136,269 and then 136,244. So I'm gonna just go to my highest entry. So it was 136,246. Okay. Yeah. So based on this area, so I had all of this exhaustion marked off. Most of my zones are color coordinated, by the way. My green is my daily zones, my yellow is like my hourly and lower time frame zones, and my orange is my 4-hour zones. So seeing this exhaustion here, I just pretty much marked this off. So if price did not break above this exhaustion zone at all, once it came here, you see how price kind of rejected it. came down and then broke our counter trend line just based off of the higher lows that kind of started forming here. 1, 2, and then that's point A based on this bullish wick, and point B based on this bullish wick here. And then once price pretty much crossed over that counter trend line, it showed me that the sellers are ready to take the market back to the downside a little bit. Then once I had seen that and watching how price kind of mashed up together here, I wanted to see a little bit more detail, so I went down to my 15-minute just to see how the candles were forming. And then I kind of anticipated the break of the counter trend line just based off of the price showing me these levels of well, the market structure, actually just these higher highs and higher lows. So on our hourly we had this become a higher low, but on our 15-minute time frame this became a higher low, where it was a wick on the hourly time frame. So that's where time frame correlation comes into play. So if you need to see more detail, at times you have to zoom in. But if you want to see less detail, if the market gets a bit choppy for you, because you can't analyze it at the time, it's good to zoom out just to keep your mind clear. But after studying the charts for a while, you'll know how to deal with choppy markets most of the time. So after this higher low had formed, I seen price attempted to push and break this level of resistance based on this black line here. Bomb, change the black, and then price pretty much respected this entire area, just tested candles, bullish, bearish, all throughout this area. It never really broke out. So after seeing that rejection, I was pretty much waiting for pretty much a retracement to some extent towards this black line and then a push down. So usually aggressive pushes happen really fast, whereas the slow pushes come from the bigger retracements. So based on this 15-minute time frame, we had our leg down kind of pretty much after a rejection of this black line, which is our resistance, and then we had price retrace and then give us a level of minor resistance here. I'm gonna just mark this off red so you guys can see it still. And then after these candles form, it showed me a nice exhaustion, a buyer's exhaustion candle. Then we had 3 bearish back-to-back candles. So now I know that is a decent level of minor resistance. So price had come back up here to retrace again, and then I seen another bearish engulf in here. So after seeing that, I'm like, this is kind of a good opportunity, good risk to reward. I'm only risking about pretty much 15 pips, which is on the 10 line $1,500. So I wasn't sweating it all too much. It wouldn't have been a big hit to my account, and my target was pretty much out based on the higher time frame of my 4-hour, which was all the way down here to this orange zone, which was about 80 pips. So if we go to our 4-hour, just so you can see remember our overall picture here. So we came back all the way down. We hit target pretty much perfectly based off of this support level here, and then it had pushed up. So let's go back down to our 15-minute here, and then so once I had all of those things together combined, just gave me more confidence in my order overall. My stop loss placement was based off of here because it was above these, pretty much above this zone entirely. I didn't expect price to come back up here because it was already below my resistance line. If it did, it would probably barely not touch my stop loss, if that. And then my scaling order was at 136244, which was not too far off of this order here. So after price made that bearish engulfing, it kind of stayed stagnant for a little bit, but then it gave me some more confirmation just based off of these 3 candles right here. I like this formation here. I'm gonna just get rid of this short tool here, just based off of these 3 here, 1, 2, 3. So after I seen this engulf this bullish candle here, that just gave me confidence to enter another short order. So then pretty much enter here, boom. Same stop loss across all orders. So now my risk is at $3,000, if that, but my profit was $14,000. So after that, structure seemed to maintain. I just marked off like a minor trend line here to just see where the market was, how the market was gonna react to this level. If it came back up and started trailing, point A based off of this bearish wick here, point A based off of this bearish candle here, and then yeah, it just melted, man. And then after that was like pretty much that $24,000 week. After that, I was kind of good for the week. I wasn't really looking to take any more trades. But thank you guys for tuning in. Right now I'm recording with OBS, my stream setup pretty much. So I don't even know how I'm gonna do this in the future. This is my kind of like my first breakdown video. So thank y'all for tuning in. Don't forget to like, comment, subscribe for more content. I'm gonna be dropping some knowledge videos for y'all, some nuggets, giving y'all some content. Thank y'all for tuning in. Peace.